Hey everyone, welcome back to another edition of That's Our Two Satoshis Live, where we talk about what's going on in the digital assets market. I'm Jeff Dorman, Chief Investment Officer at ARCA. Before we get started, as always, this commentary is not intended to be investment advice, investment research, or a recommendation. Please consult your investment professional for your own circumstances. For those new to the show, we've been writing about the digital asset market for almost 5 years now. We write a blog every week called That's Our Two Satoshis. We try to keep it timely and relevant with what's going on. Obviously, there's a lot going on with the market right now. BlockFi just officially filed for Chapter 11 today. Obviously, we've been going through the FTX mess for a while now in their Chapter 11 filing. Digital Currency Group and their subsidiary, Genesis, seemingly having some solvency issues right now, trying to go through their own either in-court or out-of-court restructurings, or potentially an equity raise if they can pull it off. So needless to say, a lot going on in the market right now. And we're going to try to dive into some of that and talk about what's happening. So to start with, let's talk about just the overall market before we even get into some of the specifics here, right? So interestingly, not a really exciting week in the markets, given what's on right now. We basically had back-to-back weeks with little to no movement across most broad digital assets. There's been a few outliers here and there. ApeCoin, for example, up about 30% from the lows in the last week and a half here ahead of their staking. But outside of that, not a whole lot of real differentiation. What's even more interesting about that, though, is that the Thanksgiving holiday week or weekend, I should say, has historically been really volatile for digital assets. We put a couple of charts in there in our write-up. Again, you can get our write-up at ar.ca/blog. But we put a couple of charts in there showing the volatility of the last few years. So Thanksgiving 2018, ETH fell 32%. I'm using ETH as a proxy just because I think it's more representative of the market than Bitcoin is. But if you remember back in November of 2018, it was all started with the Bitcoin Cash and Bitcoin Satoshi Vision wars that ultimately tanked the market. Thanksgiving 2019, ETH fell 28% and then subsequently rose 19% over the next couple of days. Thanksgiving 2020, ETH fell 18% and then rose 23%. And Thanksgiving 2021, ETH fell 13%. So needless to say, the lack of volatility is actually more surprising than any volatility that we would have seen over Thanksgiving. And there's a reason for that. Think about why a Thanksgiving holiday would normally be volatile, right? It's because most people aren't paying attention, right? Market makers aren't providing as much depth in the market. Individuals aren't paying attention to the screens. It's really easy to move a market one way or another when there's less participation and less eyeballs on there. So typically, if you're trying to, let's say you build a short position and maybe you start selling, market sells into the market, hoping the market will start to go down and liquidate some longs and you can buy it back lower. Or, if you're long the market, same thing, you can start making some market buys, hope it builds some momentum, it starts liquidating some shorts and you can sell it higher. Whatever the reason, whichever way you're going, there has to be a rationale for it to go that way, right? There needs to be some leverage players and there need to be some big funds or individuals who are willing to kind of push the market one way or another. The fact that we didn't get it this last weekend is more indicative of who's left in the market than it is the market itself. The big players, some of the biggest players are gone. Three Arrows is gone. For example, some of the bigger market makers are either gone or certainly nursing wounds from the loss on FTX a few weeks ago, right? All the market makers keep significant assets on all the various exchanges. Some of the bigger lenders, right, from BlockFi to Genesis, are shutting down or heading in that direction, right? So there's just not a lot of leverage in the system. There's not a lot of depth to the markets. There's not a lot of ability to short the market. I mean, FTX is one of the most popular places to short the market. It's really hard to have a big position right now, and as a result, you're not going to get a big swing one way or the other. So I think that's probably the biggest takeaway from last week is, this may be where we're headed in this market for a while, is lower liquidity and lower volatility. Until you start to see a little bit, more depth added back to this market and a little bit more market participants filling the voids of those who are either permanently or temporarily gone from the market. So let's get into, Digital Currency Group specifically, because like I said, we already have clarity on FTX. We know that there's blatant fraud there. We know that that is a bankruptcy that is going to be messy, 5 to 10 years probably. BlockFi, that'll be a cleaner bankruptcy in my opinion. In fact, I just went through the first day filings. For those new to distressed and bankrupt scenarios, I highly suggest you get off Twitter and actually go to the docket itself and read the first day filing. You'll learn a lot more following this yourself than you will trying to piece it together from others. But we're going to learn a lot about what BlockFi is doing as well over the next few weeks here as more documents are released to the bankruptcy docket. So those two stories are largely played out. The one that's really left and out there with some uncertainty is Digital Currency Group. We actually wrote back-to-back articles about this because there's a lot more questions than there are answers. But last week, we did finally get a little clarity. CEO of Digital Currency Group, Barry Silbert, finally put out a letter to shareholders, putting a little bit more detail behind the rumors. For those who don't know, DCG is the parent company, but there's a lot of subsidiaries, including CoinDesk, the media arm, Genesis, the lending and trading arm, and Grayscale, the largest asset manager. What DCG did in the last few months basically transferred liability from Genesis to themselves. And that's going to make this really messy. What I mean by that is Genesis had a $1.1 billion loss to Three Arrows, right, back in May or June. They could have filed for Genesis for bankruptcy right there. It would have killed one of their subsidiaries. It would have killed a profit stream for DCG, but it wouldn't have extended beyond that. But instead, DCG absorbed that loss and basically took on that bad debt from its subsidiary Genesis up to the parent company, DCG. Making matters worse, DCG also borrowed, I believe, up to right around $600 million in a shorter-term loan from Genesis in order to fund a buyback of its own stock and to support the GBTC price that was cratering to one of the largest discounts it's ever had. So you have a really messy scenario here of intercompany loans, and that's not great for a company of this size. You generally don't want to have these different intercompany loans back and forth with each other where it starts to get a little sloppy with regard to the accounting and where the equity is. Now, nothing they did is everything they did is above board. There was no wrongdoing here. It just makes it messy in terms of somebody coming in now to fill the hole. And the reason this is important is because it's not just DCG and Genesis having loans to each other, but Gemini Earn, for example, was offering their retail clients yield by basically loaning out their assets to Genesis. So it's not just DCG saying, "Oh, no big deal if Genesis doesn't have the money right now. We can eat it." Now you have to give the money back to Gemini. So something has to happen here, right? Either Digital Currency Group has to raise some equity, or they're going to have to file a bankruptcy at Genesis and ultimately hurt some of the recoveries at Gemini and others that led to Genesis. So I don't want to make this about DCG. The reason people care about this is because what does it mean for Grayscale assets? What does it mean for GBTC and ETH, which are trading at greater than 40% discounts to net asset value? Well, it means a lot. And I think a lot of people are speculating that these are good buys down here, and they very well may be. In fact, full disclosure, ARCA and some of its funds have just recently started buying some of the Grayscale assets, but not really for the reasons that some people think, right? We don't think this is actually a bullish trade. There's not a real rationale for GBTC or ETH to close that valuation gap to net asset value in a bullish scenario. In fact, it's much more likely that that valuation gap closes in a bearish scenario. So I'll give you some scenarios here that might play out. If Digital Currency Group is able to raise equity, let's say they're able to fund a $500 million equity round from someone, and they're able to distribute that money down to the Genesis level to effectively pay back Gemini and other creditors without filing for bankruptcy, that's a great outcome for the market, right? It keeps Genesis out of bankruptcy. It keeps DCG out of bankruptcy. It pays back Gemini clients. That's a good market outcome. But by doing so, you are effectively going to always be in fear that Digital Currency Group is going to sell GBTC and ETH on the open market, right? They're the biggest shareholder of these two trusts. And if we don't get a bankruptcy filing and these guys, muddle along as a going concern, as a company that is still continuing to operate, you're always going to have in the back of your mind that these guys are going to sell these assets at any time to raise liquidity. That's going to make the discount to net asset value widen even further, or certainly not close. So in a bullish scenario for the market, meaning Digital Currency Group raising equity, it's actually bearish for Grayscale assets. Similarly, let's say DCG and Genesis, do file for bankruptcy. That would actually be bullish for Grayscale, even though that's bearish for the market. And the reason for that is that, just like with BlockFi's filing today, if you go through the first day motions of BlockFi, BlockFi has been selling $250 million of assets over the last 2 weeks while they prepared for bankruptcy, because once you actually file for bankruptcy, you can't do that anymore. So they've been a net seller on the market of pretty large size without anyone knowing for the last 2 weeks. Now that they're officially under court supervision, they can't do that anymore. So it takes an overhang of sellers away when you file. And the same thing would happen if DCG or Genesis filed for bankruptcy. It would take that overhang away. They would no longer be able to sell these assets. So in a bearish scenario for the market, meaning two big companies file for bankruptcy, it would actually be bullish for the Grayscale assets because it would take away a large overhang of sellers. Another scenario is, let's just say Bitcoin and ETH just continue to fall. Maybe ETH gets down to 800, Bitcoin gets down to 10,000, whatever. Well, in that case, if you actually own some of the Grayscale assets instead of owning Bitcoin or ETH, you actually be better off. You have a little bit of downside protection just because you own an asset that's already trading at a steep discount to its asset value. When you go down the list, I guess the other one would be, let's say Grayscale is able to get Reg M exemption. Basically, it means right now, if you invest in the Grayscale Trust, GBTC, or ETH, you have no ability to redeem those assets. You can sell them on the open market, but you can't actually redeem it back for the underlying Bitcoin or ETH. But they could file for something called Reg M exemption, which would allow redemptions of the trust. In that case, it would be very bullish for GBTC and ETH because those assets would trade back up to net asset value, but very bearish for the market because it would mean people would be liquidating their GBTC back for Bitcoin or liquidating their ETH back for ETH, and most likely selling that Bitcoin or ETH on the market. So again, we laid it all out in our blog, but I think it's really important to know that right now, if you are very bullish on the market, there's ways to buy the market, right? You can buy Bitcoin or ETH, or if you're bullish on a recovery in a Solana or something like an event like ApeCoin, there's ways to buy the upside of this market. But I don't think Grayscale assets are a way to do that. I think if you're buying those, you're effectively buying a put on the market or selling a call on the market, and you are probably only going to do well in those assets if the market continues to trade down or if some bearish outcomes happen. So we'll see what happens ultimately with Grayscale and DCG. We'll be watching. I think there's a lot of really interesting scenarios here, but I also think it's important that this is one of the last uncertain stories. We've had clarity at Three Arrows, we've had clarity at Celsius and Voyager and BlockFi and FTX. This is the only one we don't have clarity on. And generally, markets trade well when there's certainty, even if it's a bad outcome. So I would expect if we do get a bankruptcy filing from DCG or Genesis, it actually would be ultimately a pretty good signal for the market. But away from that specific entity here, I think the other real interesting story going on in the market right now is just the way the mainstream media is talking about FTX. I think those of us who have been in the digital asset market for a long time now, this is as clear case of fraud as we've ever seen. I mean, this was a clear violation of the terms of service on the exchange. There was clearly no segregation at all between their hedge fund Alameda and the exchange itself. Yet, if you read some of the takes from the mainstream media, especially like the New York Times, for example, they're crafting this as if this was just another casualty of a down market. And obviously, this is very different, right? We've talked about this before. Like Terra Luna was a blockchain initiative that failed, but it was pretty transparent in terms of what it was trying to do. BlockFi, right? BlockFi, maybe not the most transparent company in the early days, but tried to become more transparent as time went on. That's a failure of a business model. It certainly wasn't fraud. FTX Alameda was fraud. But the way these things are starting to be tied together, we're losing focus on what actually happened versus what the media narrative is telling us. And I think that's really interesting because part of what we're going to have to do with 2022 here is we have to actually learn from our mistakes and move forward. And I actually thought one of the most interesting things I've read over the last week was an article that I found on Substack, and I linked to it in our blog. But it was an article written by David Phelps comparing what happened to digital assets this year to what happened to the railroad industry in the mid-1800s, which was there was so much excitement about railroads and so much investment in that space that the over-exuberance and the over-investment actually contributed to the market falling apart and people losing confidence in the railroads for a number of years. That's probably the best parallel to what's happening right now. In fact, a direct quote from the article was, investors were so right that they made themselves wrong. They bet on the right and destroyed it for years to come. And I think that's probably where we sit right now in digital assets. I mean, we have never been more confident than ever that there is a world where blockchain is important. I mean, you are seeing everything from the rise of stablecoins to the rise of DeFi to the rise of NFTs to tokenization of assets like we're seeing from KKR and Apollo, that blockchain technology is here to stay. But the overexuberance and the confidence we had investing in this space is ultimately what led to some of these decisions by companies of excess and over leverage and shadow banking and perhaps even fraud and corruption in some cases like FTX. It'll be interesting to see how far and how long this tarnishes the industry before new investors come back in. So I'd really encourage people to read this, but I think one of the most important takeaways from this destruction is where is the interest going thereafter? Where are the assets going? And you can see, DeFi protocols, for example, continue to operate flawlessly. In fact, in some ways, they're essentially acting as a senior claim because in all of these bankruptcy cases that we're seeing, lenders and borrowers are rushing to repay their loans on DeFi applications before they bother to pay back a centralized counterparty because there is no negotiation with a smart contract. You can't negotiate with code. If you're about to default, you're going to lose your assets. So the inherent nature of how these over-collateralized smart contract loans are working continues to show itself over and over again. But we're also seeing a pretty big rise in self-custody. Both Ledger and Trezor reported record sales last week, which was pretty interesting to see because I think a lot of people don't really know how to self-custody. So it was nice to see that. You're also seeing on-chain metrics showing assets flowing out of exchanges and into both DeFi applications as well as non-custodial wallets. So more importantly, we may not see asset prices increase per se right away, but we are starting to validate the use cases for blockchain. And I think that'll be the takeaway for 2022 is in an ironic twist of fate, the failure of all of the companies that tried to make this industry great and tried to invest heavily in this industry is actually going to be what validates the industry in the first place. So that's it for this week. Please go ahead and take a look at the blog at ar.ca/blog. Reach out to us. Everyone enjoyed their holiday, and we'll see what next month has to offer. Thanks, everybody.